Before I get started, with a show of hands, I would like to see how many people are in the field of investments or business education here, so I can frame my conversation accordingly, because I think that most people are in the School of Law. 1, 2, 4. Okay, how many lawyers think they are in the business of business? How many future lawyers think they'll have to make a living by producing goods and services that somebody is willing to pay, that they think they are worth?
These are law students. They want to study now.
Okay, once you got done, do you expect to make a living being a lawyer, or you're going to work in a non-profit? Well, there are 4 people, I saw 4 hands who have interest in investments. With that, I will forget what I had written, because I thought the class would be 50% in investment field. The word globalization and trade, international trade, has become a new word, but it has been around since the inception of mankind. We as civilization have been traveling in search of better conditions everywhere. When we started our life in Africa, we went wherever we could find food, water, and shelter. Same thing is applicable in business world. Businesses look for a better place where we can find better investment opportunities, better working conditions, better labor, and the bottom line most of the time is economics. Is it cheaper, better, faster? I run a venture fund, and with no apologies, we are in the business of making money. We will invest in places which is not against particular ethics, but if it's close enough that complies with the law, we will invest. In last decade, the world of investing has shifted. Europe and America were always looked upon as a net giver of investments, not receivers. The trend started changing in the 80s, but in the 90s, and again in the beginning of 2000, the trend has changed significantly. America and Europe have become a net recipient of Asian investment in many ways, especially China, especially in the US. We are literally dependent on Chinese government buying our national debt. About 11.5% of US national debt is owned by China. That's not the topic of my talk. The reason I wanted to put that in the framework is to show how quickly, in 10 years, the shift of inflow and outflow of funds has taken place. And if you look at India and America 10 years ago, nobody would have expected Indian companies buying American companies. Today, Indian entrepreneurs are buying homes in New York cheaper than they could buy homes in Delhi and Bombay. It could have never ever happened in my lifetime. I've been in the US since '79. I didn't think I could dream of a time where flats in America will be cheaper than flats and homes in India. Indian businessmen, when they travel, they find shopping cheaper in America today than in India. The suits that I'm wearing today are cheaper, made in India but purchased in America. It's amazing. The hotels are cheaper in America, the 5-star hotels in India, just because demand and supply and the people are willing to pay. A lot more expensive here than in America. I can get a good new room with 5-star hotel in New York between $300 and $500. In India, the rates are pretty much the same, where the labor costs are low, but people are willing to pay. Having said that, as an investor, we look for a few things that are very fundamentally important. Is the company going to make money by taking this bet on a short term or long term or continual term? India is a growth story, so people are willing to take big bets. But on that, the fear comes, is the story clean? Are the books trustworthy? Or the markets less manipulated than America? The global equity markets are always manipulated. That's a fact. Whether it's America, Europe, India, China, the markets are manipulated. To what degree the law enforcement is applicable to correcting the wrong? The monies that we are investing in India today is because of the local domestic consumption. We are not investing it based on export. For 10 years ago, all the money that was invested in India was in companies that were doing exports. Today, we are less interested in it because the rest of the world is buying less. India, China, Brazil are consuming a lot more. There's a net consumption growth. I would be happy with about 5 to 8% rate of return in America on my investment. If I get 10% rate of return, I'm doing extremely well. In India, when I put my money, I would like to see a minimum of 25% rate of return. The question is why? There are two answers to that. One is the fear. We in the West still have a lingering doubt of the stability of a country which is robust. And I use the word doubt because as an Indian American, I have a double hurdle to cross. One, my childhood memories of India, so I'm not starting with a clean slate. I already have lines on them. Second, as an Indian American coming here, when I open my statements in the US soil, I need to be careful that I'm not considered biased towards India or for India. And 25% rate of return in India seems extremely normal. In America, it's unheard of in many ways. I mean, our fund, we are happy at 18 to 20% rate of return in America. In India, our average returns are about 40%. In China, most of the funds have not made a single penny in the last 10 years at a macro level. Contrary to the belief, most Western investors have lost money in China. Most Western investors have lost money in India until about 4 or 5 years ago, who were not of Indian origin. Most Indian investors of Indian origin who have invested in India have made money. It's quite interesting because the Western investors came here, they bought everything at the peak without understanding what it takes to get the job done. I was having this conversation last night with somebody about housing markets. We invest heavily in the US in housing market. Our failure to make money is generally the delayed regulatory delays or the market condition. In India, the same issues of regulatory delays and market condition can never be understood based on today's regulation and regime by an outside person. It has to be a local story. When you see slum rehabs, what goes in it, I don't even want to touch. But Indian companies have been very good at it. I looked at investing in Indian real estate for 14, 15 years. Every time I walked away from it. Because the ingredients needed to succeed are very complex. And Indian businessmen are a lot more shrewd and sophisticated than the Western businessmen when it comes to understanding what it takes to succeed in a large development in India. As far as foreign money is concerned coming to India, it will keep coming. Only thing that will stop it are terrorism. If we have a major terrorism, that will be a major, major threat to India and global financial security. Second, if we believe that the center under the current government who has provided a strong, consistent, clear, to a certain degree, stated goals and objectives will be changed dramatically from time to time. I don't think so. I think Indian story is here to stay. The money will flow. And final question mark is the two sets of books, the manipulation of large corporations' governance. If India can rise, and it is rising very dramatically, on the governance standards, and I hope all of you who are graduating here from business law, international relations, will take a solemn oath that you will do what's right, even at the cost of leaving your jobs and resigning from companies, even if you have to, so that you don't sign statements that are not true. India will become a modern economy in the next 10 to 20 years. Is it a threat to America? Absolutely not. Indian story is not a threat to America or global economic stability. More people who rise to the economic stable livelihood in India actually is going to add to the global stability and increase in global standard of living. I don't like this concept of India and China, India or China. Concept is India and China and Brazil and Indonesia and every other developing countries. Every citizen has a right to a good standard of living. With that, the economic benefits that will come out of India's growth will benefit America. There will be realignment in investments. And I think in the next 3 to 5 years, to Nayan Chanda's point, India will start outsourcing. We are currently outsourcing many things, but India will start outsourcing a lot of the IT functionalities to countries like Philippines and perhaps to some Latin American countries if the English can be implemented there. I would like to take this opportunity to ask any of you to think about what globalization investment means to you and what were the reasons of America's meltdown in the 80s, the early 90s, and then again in 2007. It all boils down to governance, lack of transparency, and unethical behavior. Same thing in India. We are used to it, but at some point we'll have to walk away from it and completely turn our expectation what is standard and what is unacceptable. Thank you.